Hey everyone, this is Sean McDonald with Quiet Waters Realty Group and eXp Realty, here with our latest question and answer session with our friend Patrick Stoy from MC Mortgage Group. Please subscribe to our YouTube channel and follow us for more information on how to adjust to this changing market. Of note, Patrick gives some great advice at the end for things he's doing with his business and recommendations for other entrepreneurs and small business owners for what he recommends to be doing in this market to set yourself apart. So please enjoy. Patrick, thank you so much for joining us here today. Thank you for your help just throughout the past couple of years. And we really value your company and your partnership with us. And thank you so much for being here with us.
Well, Sean, thanks first off for having me. It's a great honor, so really appreciate. We've had a great relationship through the last couple of years and have grown together, so it's exciting to see that happen for both of us.
Yeah, absolutely. Well, I just wanted to kind of start with asking you, kind of catch us up to speed with MC Mortgage Group, like where are you guys at today? What changes have been kind of happening with your company?
Yeah, with MC Mortgage Group, basically at this point, what we've done is we've gone from pretty much a big refinance shop over the last couple of years as rates were down in the twos and everybody took advantage of that, and the threes for the investors. That we've really gone from a standpoint of servicing our past clients and helping everybody get affordability down so they have better cash flow to be able to pay more things as inflation continues to go, to where at this point we're really focusing on growing the sales team and focusing on making sure that you as real estate agents are taken care of, because at the end of the day it's making sure, the simple things, we close on time, we communicate the basics, but at the end of the day we want to make sure we provide a world-class experience for everybody involved in the transaction, because it's a big step for everybody, and especially with the amount of the cost of real estate these days of going up. It's a big thing, and it's scary. So we just try to walk people through that.
Cool. Yeah, not many people are refinancing right now.
Nope. Not unless they're pulling cash out to buy more investment properties. That's about the only ones that we see happening right now.
Well, maybe that'll come back next year. But can you go over just kind of high level your process from start to finish? Like if I were buying a house for the first time, what would I expect if I were to work with you guys?
Yeah, generally the way it kind of starts off is that I'll generally get a text from an agent, a three-way text kind of introducing. And generally our speed to lead basically on that is 5 minutes. Try to get back in touch within 5 minutes of reaching back out to the customer. From that standpoint, I will have a mortgage consultation with them and just go through a high level of how long you've been on your job, basically the ability to repay, is that's what we're always looking for. What kind of money do you have to work with for down payment? Is it a gift? Is it your own money? Are you leveraging a HELOC from a departing residence? Something along those lines. And then once we go over the high level of getting the pre-approval out of the way, from that, it's just a matter of getting the supporting documentation from them. And what I'll do at that point is I'll turn it over to one of my mortgage advisors, to where at that point, they're just getting your W-2s, your paycheck stubs, your tax returns if you're self-employed. Just kind of understanding what we're working with really just boils down to kind of you thinking like a doctor-nurse standpoint of like, we got to understand what we're working with before we can tell you, here's what we can do to help you get it taken care of, or what your goals are.
Yeah. No, that's awesome. I have been the recipient of that laundry list of items needed a couple times. It's not my favorite thing, but I know how important it is, so you can help the client strategize and figure out what the best options are for them.
Well, and the reason behind that, though, is we want to make sure, especially here in North Carolina, where you have due diligence fees that you do not get back if the seller accepts your offer. We want to make sure that we're protecting your gold and that you're not risking it. So even though it may seem like, man, they're asking for everything under, that I can provide available, it's because we're trying to make sure that there is going to be nothing that could risk your money that you've worked very hard to by giving it to a seller.
Yeah, no, absolutely, and that's so important. So thank you for that. What could say someone's buying just a primary residence? What is the typical closing timeline that you guys are seeing right now?
Yeah, so generally from the day that you just say get under contract, we order the appraisal within 24 hours of that, because that's the most important thing, because at the end of the day, when due diligence is over with, we need the appraisal back, our income, assets, credit, that's all done up front. So literally it's just waiting on the appraisal, which is generally about 9 business days, so essentially 2 weeks.
Yeah.
So, and once the appraisal comes back in, as long as we have your title work from the attorney, I mean, we're generally ready to close in 15 to 21 days.
Okay.
But a lot of times, of course, the purchase contract dictates, the actual closing date. But if we have everything we need, I mean, we generally get them clear to close in less than 15 days.
Yeah, well, that's huge. And typically, sellers will be open to closing early if possible, and it's usually a win-win for most people. That's awesome. So, for those of us who are self-employed, and for small business owners or someone who just left a W-2 job, say they're a real estate agent or something now, what products do you have for self-employed people?
Yep. So basically the way it works is, and this is where we love working with self-employed people, being self-employed myself for 20 plus years.
Yeah.
I've got to know what is the best way of getting things done. Is that we will either we'll always analyze your tax returns first, even if you're self-employed, to figure out why you can't fit into the box of going full doc. From that standpoint, the next alternative we have is what's called a bank statement program. And different investors, being that I'm a true independent mortgage broker, I have a Rolodex of different investors that are basically wanting to do these deals, is that we can have, some programs have as little as 3 months bank statements, some of them have pretty much as 12 months bank statement, and some of them have as 24 months bank statements.
Okay.
And of course, the more documentation you provide, the lower rate you're going to be able to get, and also the higher loan to value, so less down payment you'll be able to put down because you're disclosing more.
Yeah.
Okay. So once we get past not being able to go full doc, we have the bank statement program. We also have P&L. We literally can work off of P&L and go at it from that direction. And then we also have a no income one, literally with 20% down. We don't get into anything. It's based off of your credit score and how much you have in reserves after the closing, and the down payment can even be a gift for the down payment. So a lot of creative programs out there. It's just to us a matter of understanding what we're working with, because every deal is different and every situation is different. And the situation's not forever. It's really about just buying the house, and then when you file next year's tax returns or even the next year's, then you can come back and refinance it and go to a regular traditional Fannie and Freddie product.
Okay. Yeah, that's cool to have a ton of options. And you brought it up a little bit. Can you explain the difference between your company as an independent mortgage broker versus like a loan officer from a bank or a mortgage company? Yeah,
so the way you got to think about it, and this is where a bank basically has, this is their product, this is their rates, and they're captive to just that. Just that. Where being a independent mortgage broker, my box is this big. So it's just a matter of me truly understanding what I'm working with, because I've got literally 50 plus banks, non-banks, investors that we're signed up with that are always looking to help people, obtain real estate.
Yeah.
But it's just, what are we working with? So that's where, I'm literally just like, I have a solution for it, but I just have to understand what I'm working with, so I know where to put you at, so I can quote you your rate and your terms.
Okay, cool. The couple of cool things, we've talked about it a little bit in the past, but I thought it'd be interesting to bring up and just get the word out there a little bit more. But can you explain a little bit about the Ribbon program and how that can help not just buyers, but help agents to better serve our clients?
Yeah, absolutely. So it's for primary residence purchases only, because the whole purpose of it is to stimulate primary residence purchases for people that live in that area. That can basically, win the property. The reason it was invented was 5 years ago, basically all the iBuyers, all the companies were coming in and buying all the properties to turn them into rentals. So the program was created by Shavel to basically come in and give the average hardworking person the same opportunity as a cash buyer to come in and close in 14 business days with no appraisal contingency and no financing contingency. So what that does for the seller is Ribbon basically up front has a valuation model that they stand behind, and I'll go over that in a second, but basically the valuation comes back, and what it does, and let's just take 300 for an example, comes in at $300,000, and from that standpoint, with the Ribbon addendum to your normal purchase contract, it basically states that we're going to buy this house at $300,000, and the 14-day business closes the earliest they can do it. I always like to explain it to people. It's the rich uncle, because people can kind of understand that a little bit better.
Yeah.
So just think about rich uncle going, hey, go ahead and get under contract for a house. If you can't close on it, I'll write a check for you so you can buy it that day, and you can buy it back for me, over the next 6 months whenever you get the opportunity to.
Yeah.
I mean, you're just going to pay me rent while you're living there. So I think a lot of people associate it with the rich uncle more than that. But at the end of the day, for the seller, it removes the appraisal contingency, it removes the financing contingency, and the good part for the buyer is, let's say that their evaluation comes in at 300 and the appraisal comes in at 290. Ribbon actually makes up the difference between the 290 and 300, so the seller still gets their 300.
Oh, wow.
But the buyer's only having to pay the 290 because that's what the appraisal comes in at.
Yeah.
So it's a guarantee for everybody associated with the transaction, that it's they're there to help the transaction be successful and help the buyer that's buying it as a primary residence, that it set their offer up and above everybody else's, that doesn't have that cash offer, and more importantly was invented to beat the institutions on trying to buy all those properties and turn them into rentals.
Yeah, I love that goal and the kind of mission for Ribbon. I think it's really cool. And so as real estate agents, especially some agents who have been in the business for a while, they don't love change, or they may see something and see something new and question it and have a little bit of doubt. But I've seen you guys do this before, and it's been super successful. Are you would you be willing to maybe hop on a call with like a listing agent or even a seller to explain, the program?
Yeah, we do it all the time, and we brought it to when it first started off, and it started off back in, I think it was like around November of 2017 when Shavel started it out of Charlotte, and we took it to Raleigh. We actually brought it to Wilmington. So I've been working with it and explaining it to people for a long time of how it works. Everybody didn't kind of believe it when it first started, but now a lot of people are familiar with the Ribbon program. But it's just a matter of explaining it to everybody that's involved, and it's a great program. It really, really is to help promote primary residence home ownership.
Yeah, no, that's awesome. Kind of along those same lines, with the interest rates increasing recently, and some people are getting priced out of the market that are looking to just buy a primary residence. Can you explain we've talked about it before, kind of the 2-1 rate buy down, or how we can, better serve our clients through, lowering that interest rate a little bit up front?
So basically what the 2-1 buy down is, it's an affordability thing. And so I'm just going to take some examples here. Let's just say that the end rate is 7%. So what we do is that we have a calculation that says, all right, if we were to give them 5% for the first year, 6% for the second year, and then they go to 7%, what is the amount of payment and interest that would be calculated during that time period? And what we do is we either have the seller pay it, or we actually have investors that let the agent contribute to it if they wanted to help put the deal together. But basically, all that interest is just paid up front as a seller or an agent credit, basically, as a seller concession. And then the expectation is during the next 2 years, before we get to 3 years, that rates will come back down. We'll be able to refinance them, because at the end of the day, you're marrying the house and dating the rate is what it boils down to. And so through that, if that's done and you do end up refinancing during that time period, you actually get back the interest that was already prepaid for you, because it's less of a payoff that it gets credited to. So at the end of the day, it's just a matter in this market of getting seller concessions, negotiating instead of sellers lowering their price. So don't try to beat them up on the price, but really try to get those seller concessions, because at the end of the day, it's the ROI. If you're putting 5% down, and you can put the 5% down and have a seller pay 3% in seller concessions, and that property appreciates 5% next year, you just made 100% on your money. So you really want to try to minimize those other fees outside the down payment for a true ROI calculation. So that's where the 2-1 buy down, with buying it down, if you get 3% seller concession, should be more than enough to cover that, and then also leave you, it should leave you some other stuff to cover attorney fees, title insurance, the other basic hard cost.
Yeah, no, that's huge and can be a game changer for sure. And just kind of wrapping up here, so for some of us, trying to adjust to this different market, the frenzy of the past 2 years, I would say, is winding down or over, but there's still pretty good demand. Lots of people still moving to North Carolina. there's a decent amount of inventory on the market. What would you recommend for like someone like me, just an agent trying to, build our business here in southeastern North Carolina?
Yeah, I mean, here's the good part. I deal with people all over the country. We are in the perfect area. I can tell you, I would not want to be doing business anywhere else besides North and South Carolina.
Yeah.
People are transitioning here from the West Coast. They're coming from up north. They're coming from Florida because they go down there. It's too hot. They miss the seasons. They come halfway back. So we call them halfbacks.
Halfbacks, yeah.
Yep. But no, I mean, the biggest thing as a real estate agent that you can be doing right now is going and talking to business owners. That's really what it boils down to. The business owners, the ones that are going to have the employees that you can go offer them, benefit plans to use you, and then also understanding the business owners that own the buildings that businesses are in, because they're always continually buying real estate if they're in that game. So from, my opinion, from if I was a real estate agent right now, I would be going after businesses that have employees that those people are wanting to buy, and also understanding who owns all the buildings in an area and trying to get in touch with those people to find out, hey, what are you looking into next? Because they're always moving things in and out if they do that kind of business. So that would be my recommendation.
Cool. Well, thank you so much. Definitely value your input and your advice. And yeah, just thanks for joining us today. It's really fun to work with you and learn from you. And appreciate you coming.
Sean, I really appreciate you having me, man.
Cool.
Appreciate it. Thanks.
Thanks so much for watching, and please subscribe to stay up to date on more events and changes in our local market here in Southeast North Carolina.